Yo guys, what's going on? Sniper Ads here. Hope you're all doing well. So in today's video guys, we're just going to be talking about the basics of market structure and price action. I know there are a lot of beginners in my community who don't know what either of the terms refer to or what these lines on a chart even mean, but hopefully by the end of this video guys, you'll have a general sort of understanding of what they all are and how you can use it to your advantage in the market. We'll be going through that in the first half of the video, and then in the second half we'll be talking about the only strategy you'll ever need, which is the market structure strategy, something we teach in our mentorship with a lot more depth, and how you can use it on any time frame to fully maximize your profits in the market. So that's it for me guys. I'd highly appreciate it if you can drop a sub, a like and a comment in the section below if you found this video helpful, and also turn on your notifications so you don't miss any of the live streams that I do throughout the week or the videos in the future. And finally guys, if you can drop a follow on all my socials, everything is at Sniper Ads, Instagram, Twitter, TikTok, and please click the link in the description below. It's a link to my free Telegram channel where I post a lot of free education, market insights, signals, and also information regarding my VIP group and my mentorship class. So yeah guys, that's it from me. Hope you enjoyed the video. I'll see you in the next one. Peace. So guys, just very quickly for those beginners that want to know what Forex is and what's being shown in front of them. Now all we need to know guys is that Forex is just another word for foreign exchange, or the foreign exchange market. And what's being shown in front of us here, it's simply just a visual representation of the exchange rate between the pound and the dollar. We don't need to know much more than that really, to be honest, but if you guys do want to learn more and understand what it is, I will link a very good video for you guys in the description below, a video that I used when I was once a beginner as well that helped me a great deal. So hopefully you guys can learn off that as well. But for now guys, all we need to know is two things: an uptrend and a downtrend, and that's simply shown through this little diagram that I've made for you guys over here. So this diagram here guys simply shows what an uptrend is and what a downtrend is. We're going to focus on the uptrend first. Now this means when price is in an uptrending market, or simply just on the rise. It consists of highs and lows, but more importantly higher highs and higher lows. If we were to imagine that this diagonal line represents price, here we have a low in the market, then we have an impulse to the upside creating a high point, then we have an impulse to the downside creating a higher low simply because it was in a higher position than this low here. Then we had an impulse to the upside creating a higher high compared to this high here because it finished in a higher position than this high over here. Now once you see this in the market, you'll begin to see that price is continually making higher highs and higher lows. Our job as traders is to enter on a buy at these lows over here and take our profits at these next highs, or before a downtrend begins. And just like an uptrend, a downtrend on the other hand actually consists of lower highs and lower lows. So in this example here, we have a high in the market, then we had an impulse to the downside creating a low, and then we had an impulse back to the upside again, but this time creating a lower high, seen as though it was in a lower position than this high over here, and then we had an impulse to the downside again, creating a lower low compared to this low over here. And again, once you see these types of patterns occur in the market, you'll tend to notice that once the trend is established as a downtrend, you will continually see this pattern forming. And again, as our jobs as traders is simply just to get in at the highs and short the position and take our profits at the next lows or before an uptrend begins. It's that simple guys. So just before we hop into the live charts guys, and I'll show you how these concepts can be implemented in the market, I'm going to show you guys how we can spot that change of trend from an uptrend to a downtrend and vice versa. So if we had an uptrending market structure here, we can clearly validate that simply because we've had higher highs and higher lows being formed. Now let's imagine price is continuing to do this, but then all of a sudden we had an impulse to the downside, disrespecting and actually breaking this market structure here. Why? Simply because this low that has now been formed has indicated a lot of bearish momentum or a lot of sellers coming into the market and actually disrespecting this low simply by becoming a lower low compared to that. Now, where do we see lower lows? In a downtrend. Great. So once we see this, we can then assume, keyword assume, that price is going to make a lower high compared to the previous high and then begin a downtrend. Now this section of the shift of trend can come in many different formats. It doesn't have to be specifically always one break of structure to the downside. It can be two equal lows, but then a simple lower high just being formed and then a lower low coming in. It can come in many ways, but I will show you guys that in the markets. So make sure you have a good understanding of this little diagram here. The flip side can occur also. So if we had a downtrending market, then all of a sudden we had a break of structure to the upside, disrespecting this previous high and actually not being a lower high but instead being a higher high, and then coming down to make a higher low and not a lower low like this structure was creating over here. And once we see this, we can assume price to start making higher highs and higher lows and then beginning an uptrend. It's that simple, guys. So make sure you understand this concept, and then you can obviously implement that into the charts. And then once you spot these type of moves where the price is actually impulsing to the opposite direction, and then you see confirmation of it with it not following suit here with a downtrend, that's when you can assume price is then going to make another higher low, for example here through this one impulse here to the upside, again breaking structure to the upside, and then you can expect a retracement to certain levels where you can buy. But don't worry, we'll be getting into that with a lot more detail and depth now. So guys, we're now on the daily time frame for GBP USD, and I'm going to show you guys how we can actually take advantage of the daily time frame and spot the shift in trend so we can capitalize on it in the smaller time frames. But first, let's just highlight the structure or trace out the moves of what the market made so we can actually understand where price is going. So here, let's start at a low. So price was made a low, and then it actually made an impulse to the upside, creating a high. Then from here we had a higher low create, and then from here we had an impulse to the upside, creating a higher high, simply because price closed above this high here, making it a higher high. And remember, once we see this pattern form in the markets, we can expect a continuation of that. So a higher low, as you can see, it closed higher than this low. But then here's where it gets a little bit tricky, guys. We actually didn't see a significant move to the upside like we did here. We actually saw around a quarter of that move, or a third, and in fact making an equal high roughly to this previous high here. Now what makes a high an equal high? Well, not an uptrend nor a downtrend. So once we've spotted this equal high occur in the markets, we can then expect price to then drop to the downside, which it did here, and actually take out this previous structure here. This has now become a lower low simply because the previous low is above it and this one is now lower than it. So once we've seen this, we can expect price to retrace to the upside, which I'm just going to adjust the chart for you guys and show you. So once we've seen this, we can expect price to go to the upside here and make a lower high compared to this previous high here, and then we can expect price to drop to the downside and continue in its intended direction, seen as though the intention was made here from impulse A to impulse B and taking out this previous low here. So now, guys, that we've actually seen price shift in trend from a previous uptrend to now a possible downtrend, we have to expect price to make a lower high compared to this previous high here. Now we have to remember that we're on the daily time frame and this move can take days, but we're going to be making money now. So the best thing you can do from this point here, guys, to actually complete the retrace and make money on the way to the retrace before the actual impulse to the intended direction occurs, is by hopping into the smaller time frames. So what a retrace can be on the daily time frame can simply just be a full reversal on the 15-minute, simply because we're trading on a smaller time frame. And for those people who don't understand the difference between a retrace and a reversal, I'll show you guys right here right now. So we have a downtrend, and each lower high that is created is actually known as a retrace, simply because the move after that actually breaks previous structure. So we have a lower low created, then a retrace, which is a lower high, and then we have an impulse. Then we all of a sudden have a break of structure, and then we have a change of trend, also known as a reversal. So these points in the market here are known as the retraces for a downtrend, but then we have a reversal in the market simply because a downtrend is now no longer valid and an uptrend is. So make sure you guys just know that for future references. So like I just said, on the 15-minute time frame, we're going to experience a reversal. Now, as you can see, we had price plummeting down to the downside and actually breaking lows, but not highs. So we had lows here being created, and then we had a lower high being created here, and then prices kept on rinsing and repeating the same thing. Then all of a sudden, we actually had a point in the market which actually didn't break the previous low, but instead actually made a higher low. And where do we see higher lows, guys? In an uptrend. And once we saw this, we saw a price absolutely impulse to the upside and destroy these previous structures here. So we had this low, this high broken, and this high broken through this impulse here, which made a higher high. And then we saw a higher low form compared to this higher low, to this low here, sorry. And then we had an impulse to the upside, making a higher high. And what did I say regarding this move here? Once we see this move here, we can expect a continuation of that. So what happened next? Well, we had a higher low made, and then we had a higher high made. What can we expect next? Well, obviously a higher low and then a higher high, all up until we actually reach certain levels in the market which show the pattern of a downtrend occur, which will look something like this. So if we ride the wave on the 15-minute to the upside, and then all of a sudden we see a break of structure to the downside, then a retrace, and then a continuation once we actually reach this lower high point in the market. So I hope you guys actually understand that little concept there. It's very simple. A retrace on the daily can simply be a reversal that you can profit off on the smaller time frames. It's very, very simple. So guys, I'm now in replay mode and simply just going to show you guys how much you can profit from understanding the simple principles of market structure and price action, which we've just been going over. Now, just to recap, we had a downtrending 15-minute, and then we had a higher low form, not actually breaking this low here, and then simply a higher high, a higher low, a higher high, a higher low, a higher high, and we're now expecting a higher low to then continue in that direction. And then from here again, we can just simply expect that same movement all up until we fulfill that daily lower high. So I'm just going to put the chart in the 45-minute time frame so it speeds things up, and then just show you guys what price did and where price can now go. So expecting it to come around here again and just continue that journey up. So let's just play the chart. So there's the high being formed, guys, there's the low, and there's the high, and there's the low coming in now. There it is, the little wicks over there, and it just keeps on continuing. And just look at this profit, guys. If you buy at these lows here simply by just following these rules, you'll understand that price wants to continue in that same direction. Now here we had a little low, but still not a lower low compared to this low here. So this is now becoming the new low here. But now, as you can see, guys, we're starting to not break any highs. Instead, as you can see just from this one impulse here, we've now made that lower low. So this can simply just indicate to you guys we've now reached that daily lower high. So if I just show you guys from here, there we go. So if I just get rid of this little marking here for you guys, remember we had this marked initially for a lower high to be formed, and now we've reached this point in the market, and all of a sudden price is starting to break to the downside. Now this can be a simple way for you guys to take profits, but that's a whole other video. As you can remember, guys, we actually got in somewhere around here, and then, you know, we could have taken our profits here when another high wasn't formed. It's that simple. I'm just going to play the video, in fact, the chart again, just to show you guys that once structure is disrespected, a new structure will you know, occur. So as you can see here, we had a high, we had a low, we had a lower high, and now I'm expecting a lower low to be formed right after this move is finished. So you can see we're not breaking highs or breaking lows yet, but there we go. There we've had it, the lower low, and now we can expect a lower high, but there we go. We've only had that little wick to the downside, and now current price has ended up here. So again, the same principles we can apply. We can simply just expect price from this point here, made a low, made a high, made a low, another high we can make, and just keep on going and going and going. So guys, I do hope you have taken something away from this video. It is very simple at the end of the day. There's only two things you need to know: an uptrend, which consists of higher highs and higher lows, and a downtrend, which consists of lower lows and lower highs. Now here in the market, all you'll have is these squiggly lines, and you don't need to get confused by them. All you need to know is which way price is going and where it's ended up. Has it ended up higher or lower than the previous point in the market? Yes or no? It's that simple. And if you can do that on any time frame, you can then predict where the market's going to go. But yeah, guys, that's it from me. I really do hope you've taken something away from this video. If you can, please drop a like, a sub, and turn on your notifications so you don't miss any of the videos in the future. If you found this video helpful, please drop a comment in the section below and follow me on my socials. Everything is at Sniper Ads. And finally, guys, the first link in the description below is a link to my Telegram channel, where I post a lot of my signals, education, and actually a lot of information regarding my VIP group and my mentorship class, which I do one-to-one Zooms with and fully go over this strategy with in full depth. So yeah guys, that's it from me. Again, I hope you have found this video a little bit helpful, but yeah, I will see you guys in the next one. Peace.